property investment has been fairly strong, but manufacturing investment as well as infrastructure investment has been below expectation. I think that reflects, at least on the household sector, there's still a fairly robust demand for properties, either for upgrade or for primary residence. I think this reflects, on the one hand, the pace of urbanization continued to rise. By the end of year 2020, China's urbanization ratio was about 64%, and we expect the ratio to rise over the next 5 years towards 70 or 75%. So I think the urbanization drive will continue to support property sector demand. Secondly, as you know, China is looking to relax, for example, third child policy. So this perhaps will boost the demand for bigger property for upgrade and so on. So this will continue to support demand, especially in large cities, tier 1, tier 2 cities. Lastly, I think this is also reflect the improving job market. As you noticed, in May, unemployment rate, urban area unemployment rate fell by 0.1 percentage point to 5%, with improving job market condition, better income growth. I think consumers or households are still looking for upgrade or buying primary residence.
Yeah. Yeah, Linan, the only counterpoint there is something to ponder over is the unemployment rate among the youth aged 16 to 24. That's ticking up a bit. Not so much, not alarming, but just ticking up a bit. I do want to get your reaction in on Li Daoqui's comments, a former PBOC advisor who spoke to us exclusively during the CNBC Evolve Global Summit. He was in conversation with Martin Soong. He said, overall, I would say the economy, the Chinese economy is not 100% back to normal. I would say 90% back to normal. My concern is that 10% could have a higher weightage in terms of what happens in the credit markets. Are you worried about that?
I think the pace of recovery in domestic demand has been below expectation. To some extent, this reflects COVID-related concerns. For example, if you look at the average 2-year retail sales growth, improved very slightly to 4.5% year on year from 4.3% last month. If you look at the composition of recovery, for example, dining, restaurant sales recovery is still fairly slow. There has been somewhat pickup of long haul, for example, travel, domestic travel, leisure activities. But if you look at the pace of recovery so far, I think it's still well behind our expectation. But the positive development is China has accelerated the vaccine rollout, and we are expecting vaccine coverage ratio to reach 70% sometime later this year. So with better coverage of vaccine among the domestic population, we expect the consumer confidence to be boosted, and hopefully that will drive for sustained recovery in consumption.